Over the next few weeks, we've got a lot of updates coming from central banks, and the first one coming up this week is the ECB. Now, they already cut interest rates at the last meeting, so this pressure that other central banks are going through of getting the first rate cut out the way may be over for them. But they did also change their inflation expectations for this year, which could suggest that they'll give some time between each rate cut. It seems like the markets are going along with this line of thinking as well, as the next rate cut isn't priced in until September, and that's currently the only one that's being priced in for this year. The latest reading showed inflation in the Eurozone slowed to 2.5%, which is slow progress for the year, but the overall trend is still down, and there's another release the day before the meeting, although it may be a bit too late to make much difference for it. Now, earlier in the month, the chief economist hinted that another rate cut in July was unlikely. The biggest issue is services inflation, which remains the outlier, and they're not sure whether it's just lagging behind fast disinflation or if it's something that's more persistent. This also aligns with comments from Christine Lagarde, the president of the ECB. She said inflation is still a bit uncertain and they want a few more data releases showing that it's continuing to fall and won't become a problem again in the future. So waiting until September will give them another 2 data sets for inflation. So with that in mind, the meeting looks like it's shaping up to be a bit of a non-event, but we will be looking for any hints about a September rate cut, and if we do get that, there may be a reaction in the markets. But really, as long as there are no surprises, the euro and other related markets will probably stay relatively stable.